What is going on, guys? Welcome back to another YouTube video. I hope everyone is doing well and has been enjoying the content so far. I do appreciate everyone's feedback, so please do keep it coming. Now, today I'm going to be speaking about an inside bar formation and how I've recently used it in the markets to actually help me capitalize on my moves, but also double down on some of the fundamentals that have been coming out as well. So I'm going to be speaking on dollar CAD today. It was a great inside bar, how I traded it, how I managed my position, and why it's flying. So come enjoy, let me know what you think, and I'll see you guys soon. Right, so jumping on dollar CAD, this was a position that I actually caught on the trading floor live in front of everyone, given a firm dollar risk off play that occurred. Obviously, we know this has happened, this has been priced in for quite a while. So I'm just gonna explain how I used an inside bar, what an inside bar formation actually is, and we'll go from there. So I'm gonna get a blank chart for a second. Now, an inside bar, for this example, what I am gonna do, I'm gonna keep this candle green. An inside bar formation is when you have an impulsive move in one direction, right? Printing new highs. Right, so let's go ahead there and write there new highs. Printing new highs, okay? And the market then consolidates thereafter. I know this may seem a bit long right now, but if the market is consolidating within an impulsive move in one direction, all this is showing us is that the markets now have shift direction, right? Money is now flowing into a different currency, i.e. in this case, the dollar out of CAD. Several reasons which I'm happy to explain. Now, what you do with an inside bar is you measure it from the high to the low of that bar. Let's change the color real quick. Let's make that blue, my favorite color, profit blue. Now, you measure the height and size, let's move this to the left. You measure the height and size of that range. Now, your whole goal is to buy from the lowest possible point within that range to then ride that momentum that you have just seen higher in that direction. Now, following my Fibonacci video, which is why I've done this in the sequence, is to actually use your Fibonacci within the range. So what you can do is use your fib from the low of the inside bar to the high that it's actually just printed. And you are then looking to buy from the lowest possible point within that range, okay? So now back to the live market. I've actually already taken profit on this trade. I'm gutted. I should have been holding, but I'll explain why I got out already. Now, let's delete this risk reward for a second. So just to reiterate, an inside bar is an impulsive move, breaking and making new highs in a certain direction, which was this price action that we saw over here, right? Your whole goal is to look for the lowest place to buy within that range. Now, what I have been waiting for quite some time is a daily break, very strong daily break above 124. So we've obviously had that daily break above 124. 124.50 I'm going to get rid of for now. That's a round psych level, which was a line in the sand. So that's another video. So stay tuned for that. All you have to do then is take your fib from the wick low to the wick high, right? Which is the low that it made, and you're looking for the high, which is the high that it printed over there of the inside bar, dropping then to the lower time frames. There again, this is where the beauty of Fibonacci comes back into play, where we can see two previous lower swing highs, new highs, excuse me, this is bullish, new highs that were printed was absolutely smashed through with the high of the inside bar over there, right? What you're then doing is using your fib from the low to the high and looking for that lowest place to buy to ride this wave higher. Obviously, dropping down to the lower time frames, you can then look for an entry, i.e. a nice little engulfing. I personally love trading off these wicks. It's something that I have taught on the trading floor. Once that wick spikes into your golden zone and your area of liquidity, you are buying after the engulfing of that candle. So the engulfing of that candle into a nice little level of support, into our golden zone, into our fib region of the inside bar, and then you are looking to take price higher, right? So this was the trade. I personally took this into 125.10, right? The reason I did that was purely because of daily support that we had over there, potentially resistance, and we've actually just bashed straight through. So one of the main reasons why this move has occurred is the Fed have obviously put out their announcement on the taper, obviously having inflation coming out at 6.2 recently, which is another video that I have on inflation. Inflation printing at 6.2 is showing that it's not transitory at all, right? Transitory being temporary, it's not temporary at all. And we have obviously seen money flowing straight into the dollar again, with dollar index back in 95, as well as oil. Oil taking a massive dip out of the high of 85, currently around $81 a barrel. I personally expect it back at around 75 towards the end of the year. This naturally is going to lift dollar CAD. But traders, just to summarize this video for everyone, an inside bar candlestick is an impulsive move, bullish or bearish, doesn't matter what direction, in that certain direction, and it's printed either new highs or new lows. You are then trading within that range, right? You're trading within that range, and you're looking for the lowest place to either buy or the highest place to sell, depending on the direction of that, and then you're looking to ride that wave once again to the upside. But that's it, short and sweet. Hope you enjoyed that. Stay tuned for further videos. Like, share, comment, subscribe, and I'll see you on the next video. Take care.